Good evening, friends. Welcome back to my channel Intraday Trade. My name is Robin, and let's do a Nifty and Bank Nifty weekly analysis in this video. And immediately after that, I'll post another video for tomorrow's levels. Okay, so let's quickly do the weekly analysis. So this is basically sorry. So I'm just waiting for my tool to open up. Okay, so this is basically our Nifty's chart and on a weekly time frame. So what do we see here is, this was a resistance which Nifty has been following for some time, and this was the only time it broke the resistance. But I usually don't consider this as a breakout because the next candle opened directly above the line. Okay, so I don't consider this as a breakout, and we saw a shooting star pattern and then a hanging man pattern. So we see reversal candles at resistance. Okay, so this is something which we need to keep in mind. And the only thing is, however, at this resistance, when we see reversal candles, like previously at this point and at this point, we were seeing aggressive short positions being built up from the FIIs. Okay, so they used to sell in the cash market, they used to sell in the stock futures. If you remember, I have been discussing this in the earlier videos that FIs are creating bearish positions in the stock futures, and it factors in around after a month or 2 months, something like that. So that was this period, like during this period and during this period they were constantly building short positions in the stock futures. But if you compare these historical data and historical places with the current situation, we do not see any sort of bearish positions from the FIs, which is a good sign. Okay, so far we do not see them aggressive here to take the market down. So when do we understand that the market can go down is something which we'll discuss here. So for that, how do we identify is so how do we go short on a weekly time frame? So we have two reversal candlesticks here. So for both this candlestick pattern, there is a formula of trading it. So basically, if you see a shooting star, you go short below the previous candle's low. Okay, and when you see a hanging man, you go short below the same candle's low. Okay, so what does that mean? The low of this particular candle is 17,345 and the low of green candle is 360. So just about 15 points difference. So if Nifty breaks this low, we can definitely go short. Okay, so that's what the weekly analysis says, and this is based on the candlestick pattern. And let me tell you, candlestick patterns are 80% accurate by themselves. So I always prefer trading candlesticks pattern. That is one of the reason I'm discussing this here. And what should be the target? So the first target happens to be around this swing. Okay, so you see this swing, and that's how market recovered. So this swing happens to be around 16,800. And another thing which I marked is a Fibonacci level. So I love Fibonacci and it really works like a charm. So the Fibonacci level, the 50% retracement happens to be around 16,587, and so we'll consider 16,550 to 16,600. So at least from this place the market should reverse. So what does that mean? If we consider that this trend is changing and ignoring all this what has happened before, and now the market is turning bullish. So for that, a correction until this place is considered to be a healthy correction. Okay, a 50% retracement, or in a worst case scenario where the big players have to push you out of the trade, they can bring it to 0.618. So this level happens to be around 16,250, so they can push you out at this place, but ideally a good retracement is from this place, because then it becomes easier for them to break out this level. Okay, so something like this, or there is another way of breaking out, they directly go like this. Okay, so whatever, so if they want to go like this, or if they want to go like this will be clearly evident in the data that we actually read from the participant wise open interest. Okay, so I hope you all understood how do we trade based on candlesticks. So when do you go short on a weekly time frame in Nifty, and what are your targets? So the first target is 16,800. The second target is around 16,550 to 16,600. Okay, and here we'll book all the positions and see what they're exactly planning to do. Then I think we'll discuss Bank Nifty quickly. Okay, so Bank Nifty, what it did is basically it broke out this resistance. Okay, so since it broke out this resistance, so in Nifty we saw that we had a red candle like this and another red candle like this. So that gives us a picture that it's a little weaker. But whereas in Bank Nifty we have a green candle here. So why do we have such a difference? It is basically Bank Nifty is already trading above this particular trend line, but Nifty was just trying to cross it and immediately it was pushed back down. So that is one of the reason we see the difference in the candlestick pattern. So what Bank Nifty indicates us here is basically it gave a breakout of this trend line, but however it is taking a resistance at this swing high, and we have seen a shooting star pattern, and then a doji which indicates indecisiveness. Okay, so similarly like Nifty, I've also marked Bank Nifty's Fibonacci level. So how do you mark this level? So both of them, the dates are same. So it is from 13th June 2022, the low, and the high is made on 16th August 2022. Okay, so when do you go short in Bank Nifty in case if it indicates bearishness? So basically you go short once the low of the doji is broken, and as per this candle, the low of this candle should be broken. If you remember the pattern when I tell you that if the market has to halt, or if the market has to become a little bearish, it has to close, a red candle needs to close below a green candle, then the trend gets halted for some time. But here we do not see that pattern yet. Okay, however we saw that on the daily chart. So what you do is you go short below this low, and you add more quantities once we cross this low too. And what is your target? Your target happens to be around this swing, and even the Fibonacci is 50% retracement level, so both coincides with each other at 36,000. So that becomes an important support. The market should take support here and then continue to go high. Okay, so that's how it should be if the market is bullish. Okay, and the second thing that can happen in both the chart is bounce from here, make a lower high, and then break this low and fall back down. But for this to happen, we need a strong support from FI's data. So whenever that comes in, I'll definitely keep you all informed. Okay, so this is my view on Nifty and Bank Nifty on a weekly analysis, and within this area, weekly trades, we can only do straddles and strangles, just in case if we think the market can stay within this range. But you should definitely trade this breakdowns, and the upside trade will only come once we cross this. But all these levels are based on the weekly chart, so do not, take it seriously into an intraday time frame. That can go wrong definitely. So in the intraday videos, I'll discuss how are we supposed to do the intraday trading. Thank you for watching this video. Let's meet in the next video. Till then, take care. Bye bye.